Hello traders, welcome to the Blueberry Markets live stream with me, John. I hope everybody's doing well on this Tuesday, the 12th of November. Fairly quiet start to the markets this week, so let me know if you've been involved in anything. I'll be interested to hear what's on your trading watch list this week. I'm going to take you through what I'm going to be looking at in the markets. I'm also going to share with you a couple of things that I am interested in terms of the fundamental analysis this week. So who have we got? Good evening to Eddie. Welcome to the live stream. Hope you are well. Yeah, give me a wave. Let me know where you're from. Let me know where you're watching from. Going to get into the charts in a moment. G'day Ratish, I'm doing really well, thank you. Hope you're well. Right, let's get straight into it. Let's get into these charts. Now, I just wanted to share a quote with you before I got started. This is a quote from a Nobel Prize winner. I was watching a podcast with a really great trader called Linda Raschke. Let me know if you've heard of Linda Raschke before. But she did a really cool interview just talking about how she trades X, Y, and Z. Now, Linda Raschke was featured in the Market Wizards book. Okay, I don't know if any of you have heard of Market Wizards by Jack Schwager. Basically created a book of the best traders in the world and asked them and interviewed them about certain topics. And yeah, Linda Raschke was one of those, one of the new Market Wizards essentially. And she was doing an interesting podcast, and I was listening along, and she brought this quote to my attention. So I thought I would share it with you, because sometimes we need a little bit of motivation when it comes to trading. So hopefully this can resonate with you in some way, shape or form. But Richard Feynman, Nobel Prize winner in physics, says, I have approximate answers and possible beliefs and different degrees of certainty about different things, but I'm not absolutely sure about anything. Okay, and that really ties into trading really well in terms of your risk reward parameters that you set, your risk management that you set within the markets, because you don't know what's going to happen next, right? We had certainties, we had probabilities, and that's what we use as traders. We have probabilities of how we can achieve certain things. So whenever we go into a trading decision, we try and put probabilities in our favor. I talk a lot about using the WCS method. I talk about using a method that tries to put the probability in my favor. Does it work all the time? Absolutely not. But does it put me in a higher probability scenario? Absolutely yes. So I thought I'd share with you that quote, just if you needed the motivation. Let me know as well. Obviously, I've spoken to you since the election, and some of you were talking about trading over the election. I hope that you had some decent success. If you did get involved, I hope that it was a lower risk. I personally stayed out of the markets. I've had, back in 2016, I traded the election and it didn't go my way. So since then, I promised myself not to get involved with such uncertainties within the market. So I tend to just stick to the stuff that I know. Welcome to the stream. We have Shardul. Welcome, hello to you, and CG, welcome, hello to you as well. Hope everybody is having a great day. So let's get into some fundamentals. So if you're not familiar with the live stream, my name is John. I'm the Senior Market Analyst here at Blueberry Markets. What I aim to do is educate you on what's going on within the markets. I then try and show you how I view the markets and just give my own personal opinion. Hi Bruce as well, welcome to the stream. Nice to see all the familiar faces coming in here. So the way I like to trade markets is by using, like I said, the WTS method is what I call it. It's why I want to be in a particular market, the conditions around the market, and then applying a strategy. Bongo, welcome to you as well. Hope you're all doing well. And essentially, the why is a fundamental backing, okay, or some kind of sentiment backing. A lot of the times I use the commitment of trader reports. I just find I have real good success with that. I also like to look at seasonal reports as well. Looking into sort of conditions of the market, that's our technical analysis, right? That's everything from support and resistance zones, higher time frame analysis in terms of going from sort of your monthly, weekly, daily, down to a 4-hour chart. And then it's about applying strategies that help us kind of achieve returns for the month. That's the way I like to position myself within the market. Let's get started then. Let's have a little look at some of the fundamentals that are within the market. It's been a quiet couple of trading days. There's been US holidays. There's been holidays in Canada as well as in France. That was on Monday. So we haven't really seen much since then, apart from the continuation of the sort of election trade where we've seen the US dollar get a little bit stronger, for instance. We've seen the metals continue to decline, which is something we also talked about last week. The only other sort of important data we've had out is the claimant count change in the UK. So if you don't know what the claimant count change is, it's basically the first sort of employment information that we get before the unemployment rate. And what it tells us, or what it measures, is the change in number of people claiming unemployment related benefits, okay? So this isn't like disability benefits or anything like that. This is all to do with the unemployment benefits, okay? So typically, if we see this claimant count come in lower, that is considered good for the labour market, also better than forecast. And then if it's higher, then it's usually considered a bad thing, right? Because if more people are claiming the unemployment benefits, it means that there could be less people working within the economy, and that could lead to a slowdown in economic growth. So that's the way we kind of view this. Just to put a caveat on this information, it's not very accurate, okay? In the UK, the labour data can be very skewed. Just to give you an example of that, if we just open this up on Forex Factory and head down to the graph area here, I'm just going to zoom in. And we'll have a little look at the detailed graph that usually comes with this. If we go and zoom into 2024, we had a really big outlier month in August where the claimant count shot up to, I think it was 135k. If I just pop the revision on that, it was revised down to 100k, but we didn't really see in the month of August pound depreciate. We actually saw pound fairly positive for the month of August, largely due to a weakening US dollar. But anyway, we've started to see this come out. Forecasts were coming in a little bit higher, came in a little bit lower than forecast, which was great. Revisions on the previous month, we saw a revision down from around 30,000k level down to about 10k. So positive labour market data within the UK at the moment. And the pound, I feel, is still a currency that's a little bit stronger than some other currencies, especially when we look across the Eurozone, right? If you're not familiar with some of the videos that I've done before or in the live streams, I've talked a lot about Euro weakness potentially coming within the market. Shardul question, it would be good if you could share how to look at COT reports or point out to the right resource. Usually there's too much out there, not sure which is good. Yeah, I can do that for you. We'll talk about COT reports today. There's an interesting COT idea that I'm looking at the moment. Whether it will come to fruition or not, we'll have to wait and see. But we have been fairly confident in the COT signals recently, or I have anyway. I've been talking a lot about silver shorts, platinum shorts recently. The only one that didn't really come to fruition was Bitcoin, but I knew that was going to be the case really because of the US presidential elections. I knew if Trump got in, that was one of the easier markets to have a look at through the presidential elections. But what have we coming up? Sorry, what have we got coming up for the rest of today? Not a lot, really. We do have some FOMC members speaking. More importantly, the data tomorrow is going to impact the markets. We've got the wage price index quarter on quarter out of Australia. We know at the moment the RBA holding rates higher for a little bit longer. Core CPI being a problem over there. If we were to see the wage price index increase, could keep those core consumer price index levels a little bit higher and might present a bit more of a problem to the RBA. RBA, unfortunately, have got two kind of plates to spin at the moment because of the situation in China. China's situation not very good at the moment. In fact, they failed to provide decent stimulus at the end of last week, which has caused the Australian dollar to remain weaker, and I'll point that out on the charts in a little bit. But we do have RBA governor speaking as well tomorrow. But really the big data coming out this week is going to be core CPI in the US, CPI month on month, CPI year on year. Why? Well, the market is going to start turning its attention back to inflation. There's been a lot of talk that with US President Donald Trump coming in that there could be a spike up in inflation. Would we see it now? Probably not, okay? But you know, when he is inaugurated in January, it could be a problem when he starts to implement the policies that he wants to implement. We've seen that he has officially won the House today. If we actually go and if you just type into Trump wins into Google, you can get some 2024 elections. It is now, you know, although it says that it's not actually updated on here, but they do have the 218 majority now in the US House. So that's something that is interesting to take into consideration, because now Trump has the presidency, has the Senate, and has the House. So he's going to be able to pass his policies a little bit easier than what he did in 2016. So core CPI is going to be one to watch going into tomorrow. I think if we do see a little bit of an uptick in core CPI or a little bit of a hold here, then it could still be positive for US dollars. But what I'll be interested to see is how the dollar reacts. For instance, if we do see upside in core CPI month on month, but US dollar falls, maybe it's telling us that the sentiment towards the dollar is changing a little bit. Dollar is starting to come into some levels of interest from a technical perspective. So that's what I'm kind of talking about in terms of fundamentals at the moment. We obviously do another live stream on Thursday where we talk about what's happening on the Thursday. And we will be looking at what's happened as the producer price index and the unemployment claims on Thursday. So we'll talk about that then. But let's get into some charts. Let's get into the fun stuff, right? This is why we're here. We want to see some charts. We want to see some supply and demand going on within the markets. So let's go talk about the US dollar index first. Market has continued to rally. This kind of white line on your screen, let me just change that to a different color. Let's make it like a bright red. That was a commitment of trader signal that was spotted for the US dollar. Okay, so the reason why I've marked that on my chart is because it was significant for me. I liked the idea of being long on the US dollar around the 23rd, 24th of September. So the report would have come out on the 24th of September, or collated on the 24th of September. And you can see since then the market has continued to trade higher, breaking through key areas of structure, and we're still on the way up. Okay, dollar's still on the way up, and it looks like it's going to remain that way. The market very much focused on the US dollar strength, and I don't really see us coming away from that just yet. Although, if we just take a look at a weekly chart, you can see that we are coming into areas of resistance. Let me just take off these, and let's just replace some of the analysis that we've done here. When setting out sort of supply and demand zones, I really just look for big turning points within the market. So keep it really simple. You know, if we see here the market turned aggressively to the downside, I'll just make a note that that is an area of interest. Very much similar up in towards the 106s and towards the sort of 105 590s, but I'm going to go with the higher one there. If we're looking at areas of demand for price, again, just kind of follow a very similar path. Where has price turned? Okay, who's going to be driving that sentiment? It's going to be your sort of hedge funds and things like that, down into these areas here, down towards that 99. So really speaking, dollar remains range bound, right? We've talked about this for a while. The market is in an overall trading range. If I just take off the that black line, we're trading between the sort of lows around 99.75 up to the 106s, and I don't really see that changing too much. The only thing I can kind of look at is how the dollar performed when Trump was in power. Now in 2016, it had the initial rally up when Trump was announced as president, which is this little area in here. But then after that, the market continued to sort of decline. Will that happen again? I don't know. The market might not be looking at this happening this time around. They might be focused in other areas. How is it going to help stocks X, Y, and Z? We only really started to see upside towards 2018 and 19 in the US dollar. So very mixed sort of Trump presidency. We were kind of floating in his reign. This was when he was inaugurated in January, and he left in 2020, which was here, right? So the dollar had a bit of a mixed performance throughout that period, right? So not really expecting any major moves. The only difference this time, obviously, he has the House, he has the Senate. How will his policies impact the bond market? For instance, there's been a lot of talk about the US 10-year yield. I like to look at how the bond market is shaping up, because this will dictate to us really where the market thinks about the interest rate, right? So if you look at the 2-year yields, they're trading around 4.35% at the moment. If I was to pop on the US interest rate, let's go to economy here. United States interest rate, and then let me just pop that onto another scale, and then we can just regular these up. So we're trading around an area where it's fairly similar, right? So if you look at the interest rate now, it's at 4.75%. 2-year yields trading around 4.35%. So pretty close to where the market is expecting. So if anything, they're expecting the Fed to maybe go another 25, possibly 50 basis points, but leaning more on the other side of 25 basis points in this cutting cycle. Obviously, then if you go over to the 10-year yield, that's a little bit more closer to where the interest rates around 4.4%. And then if you look at the 30-year yields, they're a little bit higher at 4.5%. Basically, saying what the bond market is saying is that in 10 years, they're expecting interest rates to be around 4.4%, which is interesting considering that is a longer term outlook. So I look at the bond yields in order to sort of give us an idea of what could be happening with regards to the sort of US dollar and interest rates. And when you hear the term the short end of the curve, that's usually your sort of your 2-year yields, your slower yields, because the Fed are a little bit more reactive to the 2-year yields, depending if you believe what Federal Chair Powell talks about, essentially. But looking at the US dollar at the moment, it's looking like a stronger currency. The only thing I would say or heed a little bit of warning on is we are approaching major swing highs on the US dollar index up towards the 106, 107s. These highs were formed back in 2023 and April 2024. And again, we've kind of straight lined down into this, straight lined up into this point. So interesting to see if this is an area where we start to see a little bit of profit taking from the hedge funds that got long down towards the down towards the lows here on the 24th of September. And just kind of put that into perspective for you, let's bring over the COT reports. Okay, so I was asked a question. Hi, Azalano, hope you're doing well. I was asked the question, it'd be good to share how you look at COT reports and a point of resource. One resource that I use is Markets Made Clear. This is a company that kind of breaks down the COT reports and separates them out so you can kind of dive into them and have a little look at them in certain ways. So the way I like to look at them, you can see here, let me just actually get a little bit of a pen tool up for you so I can explain this a little bit closer. See where this pen tool pops up. Here we go. Right, so COT reports are super interesting to me because it shows us certain things, right? So you can see here there's titles to these. You've got commercials, you've got commercial percentage change, and you've got the non-commercials. Okay, now just to put this into terms here, the commercials are sort of businesses, okay, and they are classed as hedgers, okay, and they are hedging risk essentially within the market. But put it this way, let's say there's an international business. Let's talk about, I don't know, what can we talk about right now? Let's talk about Germany, right? Let's talk about Germany. So they do a lot of trade with China, okay? So China buy a lot of cars from Germany. Germany will buy sort of parts from China and vice versa, and you can see them going back and forth, right? They'll do trade with each other. Well, Germany will trade in euros, right, because that's their country's currency. China will trade in yuan, right? So what will happen is, let's say they're buying a load of parts. Let's say they're buying a load of parts from or cars from Germany, China are. They will need to buy those cars in euros, right? So they will essentially have to buy euros against the yuan. Okay, so the way they'll do that is they'll do that through the banking system, and they'll go to a big bank and say, let's say I want to buy 50 billion worth of, I'm going to do a euro sign there, 50 billion worth of euros in order to do transactions with Germany. Okay, that's what the commercials are doing in the market. So they typically go against what the prices are doing. And that's something just to take note of. I hope that made sense. I need to delete that, sorry. There we go. Then you have the non-commercials. These are your hedge funds and large speculators. Okay, so hedge funds, sorry for the poor handwriting. I don't have a pen tool, I've just got a mouse. Hedge funds or speculators, large speculators. So when I say speculators, that's like us, right? We're speculators within the market. We are looking for to take advantage of price movements. Okay, so you've got hedge funds and speculators. That's the non-commercials. So they typically follow what price is doing. Essentially, they're like your banks and stuff like that in terms of they're the market makers, right? But large speculators and things like that will try and follow price. So just to show you a quick example of this, if we scroll down to the E-mini S&P, so this is the futures market, you can see that price has been going in an upward trend. Let me just, sorry, let me take off your comment there. And if you look at the hedge funds, which is this area down here, these are our hedge funds, okay? They are also following price. They are going long with price. When you look at your commercials, which are hedging business risk, right? They are going against price, right? So a really good example of this was the US dollar. We were talking about this a while ago. So if I go down to the US dollar futures here, what we were looking at was price was moving to the upside here. Price was moving down and hedge funds were getting aggressively short. If we look at the net when it comes to hedge funds, down here, okay, hedge funds, you can see that they sold off aggressively. Okay, now they do this in one or two ways. They either reduce their long contracts aggressively or will increase short contracts aggressively. Now, in this case, what I love about this sort of resource here is if we take a look at the long and shorts, and I'll just take the net off there, you can see that they reduced long positions aggressively. Okay, I don't know if you can see that as closely, but there they reduced their long positions aggressively. And you can see price was moving lower. They reduced those long positions aggressively, basically getting short aggressively on the US dollar, but they do it at levels where it becomes extreme. So some phrases that I use is they're shorting at levels of extreme that we haven't seen for a long period of time. That means they're getting very aggressive, and they're doing that because they are pushing prices lower. They want to trade prices lower. The problem is they need to realize those gains. Okay, so what you typically see in the COT reports is when they're getting aggressive, they start to reduce positions. Okay, they start to take profits, and sometimes they do it aggressively enough that price completely flips. Okay, and that's the edge I feel with the COT reports, is waiting for hedge funds to get aggressive and things like that, and then do the opposite of what that aggressiveness is. So that was a US dollar version of that, and they are still net short at the moment, even though price has moved a long way, which is interesting, quite telling in itself of what's going on. We haven't seen any big changes here, like them getting long aggressively. So that's something of interest. But I'll show you another one that we looked at as well, which was Australian dollar. We looked at a potential short on the Aussie, or I did. I looked at a potential short on the Aussie. I don't know if anybody else agreed with me at the time, but what I was looking at was this area here. So this is a weekly chart up here, by the way. This is the weekly futures chart up here. And you can see that we were coming into resistance, right? So as a technical trader, you see the resistance, you're thinking, okay, this is going to be a potential turning point. But when you add a little bit more to it, you add a little bit of a Y, a bit of a layer, you can get a little bit more of confidence in holding a move. So you can see here the commercials were net short. So commercials were short, and they were short at levels we haven't seen for a long time. Okay, so back in sort of 2021, which were these levels here. If you look at the hedge funds, they are long aggressively as well, levels we haven't seen in a very long time. Now, typically when this happens, it can mean price rolls over. Now, this has also been helped by the China situation and things like that. But hedge funds remain long, which is interesting to me because I quite like the Australian dollar in terms of, if you look at interest rate differentials, they have higher interest rates than a few other countries. Just kind of put that into perspective. You can have a little look at that on trading economics, and you can come down to here. Let's just open this up. You come down to Australia, you can see that their interest rate is at 4.35%, whereas if you look at Canada's interest rate, it's at 3.75%. If you look at the euro area, it's at 3.4%. So they've got a higher interest rate than some of the bigger economies as well. So that's something to take into consideration. But that's how I use the COT reports to show me potential opportunities within the market, and we'll dive into this a little bit more shortly. But yeah, US dollar index showing that they're still net long at the moment. So I'll be interested to see how this kind of pans out for the markets, because we are coming into this sort of crucial area of resistance, which I can see. Fan, you've pointed out here, interesting how the dollar would react to 106. I would not be surprised to see some down move here. This would also support our seasonal analysis going long euro. Yeah, absolutely. Thank you for pointing that out, because that is something I wanted to discuss today. Also looking at a short jump in gold at around 2600, a critical structure point. changing trends on the 15-minute. Yeah, let's have a quick flip over to gold, because obviously gold has also been, well, I feel like gold is starting to feel the impact of this US dollar strength within the market. Now, if we actually bring on the, see if we just bring on the dollar index futures here. Just pin that to the right hand side. If you zoom out a little bit, typically you would see gold doing the opposite of the US dollar, because it's based in dollars, right? So you would expect that if the US dollar was getting stronger across the board, that gold prices would fall. Now, the only sort of interesting thing about this is the fact that there have been times where that hasn't been the case. Okay, usually when there's some big geopolitical event going on, you know, like when Russia invaded Ukraine, gold prices fell aggressively. So that was something interesting to have a little look at, because you probably would have thought it would have done the opposite. Actually did the opposite for different reasons. But you can see that, you know, when the dollar does start to move lower, we had this exponential expansion in gold prices. However, if you look at where dollar turned, we haven't really seen gold have a similar reaction. You know, if that's the case where dollar moves lower, gold moves higher, why hasn't it happened here? Right? Why hasn't it happened here? And that's because there's a lot of buying of gold at the moment. Central banks in particular buying gold heavily, and I don't think gold is at levels where it's going to turn just yet. I'm looking more first quarter of 2025 for that to be a thing. But looking at gold prices, yeah, I can see why you're interested in this Irfan right now, down at this 2600 level. This is a daily chart, price down in at this demand zone. So yeah, I like your thoughts surrounding this. My only thing I would probably, I know obviously this is just my personal opinion, because I'm kind of off the 15-minute charts at the moment. I'd be looking at a bigger swing, so maybe like an hourly chart move. Maybe like an inverse head and shoulders pattern or something like that would be more my thing. But I've been short silver and I've been short platinum. Okay, so since sort of Friday the 25th of October, I've been short silver, but silver's in a very similar place. If you look left, we can see that we're at this $30 level, which is a level of support. So yeah, but I've been looking for shorts since that. If we look at the hourly chart here, we've had some really good opportunities in terms of prices being consolidating, you know, creating these nice breakout situations here. Nice breakout, a little bit of a rally higher. You can see we had a head and shoulders pattern retest, market move to the downside. So yeah, I liked silver shorts. This was another commitment of trader signal here, where the market was heavily long. Hedge funds were heavily long silver, and you can see when they start to take their positions off, what can happen to price. It can roll over. But we are at support. You know, we have to take that into consideration. If we look at the daily chart, we're at a higher time frame level of support. So if we were to see the dollar index kind of rebound off of those 106 highs, then yeah, I do feel like maybe the metals will get a little bit of a bounce and we could see a move slightly higher. The other market I was interested in, I'll go over to the futures market, was platinum. Really liked platinum futures to the downside. Again, we kind of had a commitment of trader report signal on this, and look how prices reacted. You know, very nice moves to the downside here, coming into support. So out of all positions, looking at how I can probably reposition, maybe a pullback, continuation down towards the next level of support if the market continues lower. But you can see we had this kind of bullish channel developing. We consolidated at the channel, and then price broke the channel lows. Really good sign that the market is starting to swing bearish for platinum as well. So just to relate that back to the commitment of traders, just grab this is what we were looking at. And you can also find me talking about this a couple of weeks ago on the channel. But here we go, open platinum. And open this up. This is what I was looking at, okay? So again, hedge funds, let me just grab this, hedge funds down here, right? If you look at the net contracts, they were buying, they were getting really aggressive. And if we look left, they were doing it at levels we haven't seen since 2021, which was here, okay? If you look at the non-commercial, so the hedgers, right, they were shorting at levels we hadn't seen since 2021. What can that mean? Well, it can lead to a reversal in price, in my opinion. The way I trade, I looked at that reversal. So basically waited for price to try and come into sort of levels of resistance on the weekly chart, which was this move here. And you can see since then, price is starting to decline. Whether we'll see a move like that, because that obviously takes a number of months to develop, and you would be, if you were trying to short it every week, it doesn't work like that. You still have to bring some technical factors into it. You can see that there was like this bearish flag pattern, and the market broke that and continued lower, created lower lows and lower highs at that point. I'll be looking at something, as long as the trend remains the same. So if we look at the daily chart here, if the trend can remain bearish here, lower highs, lower lows, then I'm happy to continue looking for opportunities for me personally, potentially down into sort of the $900 area on platinum. So yeah, this market has treated me nicely as well as the Australian dollar and silver recently. So really like those moves. But in terms of, let's have a look at the seasonal, right? So Irfan mentioned it. Let's bring it in. So there's actually 2 seasonal players I'm looking at the moment. Sorry, Vincent, I think I missed your message. Good afternoon, if I did miss your message. I hope you're well. So let's have a look. So the first one is potentially the Swiss franc. Okay, so just looking at the seasonal here, I can see that typically, okay, end of November, start of October, we can see that the Swiss franc rebounds and moves higher, right? Now, this is an election year, okay? So the purple line is an election year. The sort of green line is 2024 so far. We have a 79% correlation with the election year. It just so happens we're in an election year, right? So that's something to take note of there. Now, that's not as strong as, if I looked at 20 years of data, we're not really following a similar plan, but end of November to October can see Swiss franc strength. If I look at all years, middle of November through to December, can see Swiss franc strength. So I quite like the idea of potentially looking at a seasonal play on the Swiss franc. Now, when I look at seasonal plays, I try and think about what markets are doing poor or what markets could be in trouble. Now, one of the charts from my currency strength meter, let me just bring this in. Okay, so we just have a quick look at the currency strength table here. Dollar's a strong currency, so don't really want to go and trade the Swiss franc against the US dollar at the moment, right? I want to go look at Swissy against currencies that could be getting weaker. One of those is the euro, right? We could look at potential continuations on the euro Swiss chart. So if I just look at euro Swiss at the moment, euro Swiss building this kind of big base pattern, right? Where you can see that we've got this kind of base in here at the 9300 level. You can also see that the lows are getting much lower, right? So we actually had a seasonal short here, which I've left on the chart, which played out pretty nicely. You can see lower high, lower coming into this area, the base being around about the 93.25s. So I think if we were to break that base, then Euro Swiss may continue to push to the downside through to the end of the year. But the only problem with Euro is, Euro's got two sides to it at the minute. First of all, the commitment of traders, we're starting to see some aggressive selling from hedge funds. So starting to get a little bit iffy on whether the Euro is going to continue to the downside. We do also have a seasonal for Euro as well. If I just go here and type in Euro, if I can spell it correctly, Euro, and we have a little look at Euro as well towards the sort of end of November going into December, can also produce a bullish opportunity there, according to seasonal analysis, and that's over a 20-year period. If I take the 20-year period off and put the election period on as well, which has a 93% correlation with the 2024 price, well, you can see that there's usually between, November 22nd through to December 17th, there's usually a bullish seasonal play there for Euro. So maybe I want to look at the Swiss franc against something a little bit weaker, right? What has been weak recently? Japanese yen, okay? Looking at the Swiss franc against the Japanese yen. Could it be an idea that we see a continuation to the upside of this market, right? If you look at the weekly chart, prices now turn bullish here. I'm just looking for technical factors to set up for me on Swiss yen, mainly being, can we come back down into some demand around about 173.50s or support levels, and then rebound from there, continue higher. I would like to see this kind of turn in my stochastic as well from a daily chart point of view, before narrowing in on the hourly chart. So quite like Swiss yen, that's on my watch list. Maybe have a little look at pound Swissy to the downside. This market has been in a bit of a range. Took a little bit of a long down through here back in September, but ended up coming out of it with break-even trade. Nothing really happened, and that was kind of my only trade in September. Really didn't really do a lot in September. Eddie, hey John, what's your average trade holding time based on COT? So the way I actually trade these is I will go down to lower time frames. So good example of this is Aussie US dollar, right? So the signal that I had on Aussie US dollar when it comes to the commitment of trader was formed here. Let me just change the color of the line. Sorry guys. Let me change it to a red. Okay, so that was the commitment of trader signal to go short on the Australian dollar for me. My technical signal was met here on Thursday, the 3rd of October. So what I do then is I will go and have a look at my hourly chart, and I'll look for pullback consolidation patterns essentially. So if I go to the hourly chart here, you can see I've still got some of the drawings left on the chart. But what I'll basically do is wait for a crossover in my averages. So this is when I'm applying a strategy now to the market, and then I'll look for consolidation phases. So you can see consolidation here, consolidation here, consolidation there. Again, a bit of a bigger consolidation where price then started to make lower lows and lower highs. Again, consolidation in there. So what I'll try and do is look for sort of hourly moves. So let's say the hourly will break out here. So that was actually my first trade, and Aussie US dollar was up here. When price broke out of that, I just put my stop loss above the high. And honestly, with this one, I targeted, I think it was a 2 or 3 to 1. I think it was more towards the 2 to 1 or somewhere in between. And then I got out of the position because looking left, there was support down in and around this area here, right? So I still take into consideration support and resistance. We had a rebound, then price broke it, and then we consolidated back up and then broke again. So I'm pretty sure I didn't take a short here, but I took a short on this break instead. But either way, I could have got short there, stop loss above the swing high, and I would have done the same thing. I would have looked at sort of maybe this area down through here, okay, or even that area there might have been a little bit more interesting to me at the time. And I'll try and aim for price to get down to these points. So sometimes it can take hours, sometimes it can take a couple of days, or maybe even, you know, if I'm really holding on to something on a cop position, it could be 3 or 4 days. The other way I like to do it as well is I'll go in a little bit lighter at first. So sometimes if I'm feeling confident in the position, again, if probabilities are in my favor, right? Think about the quote that I was talking about earlier. I'm not sure about anything, but if I've got a little bit of confidence and probabilities are a little bit more in my favor, I'll start to go in a little bit more aggressive at highs. But when I say aggressive, I just mean enter. I'll go with a lower risk and try and build positions. So let's say 0.5%, 0.5%, and then I'll try and almost build a position into the trade. That's what I try and do anyway. It doesn't work out like that sometimes. Sometimes I don't feel confident enough to do that. So I'll just be looking at sort of 0.5% entries, targeting sort of a 2 to 1, or I'll go with 1% entries, targeting 2 to 1s, 3 to 1s, something like that. So I don't usually, I wouldn't come to a daily chart, just personal preference, because I try and maximize my risk reward ratio. But let's say I shorted here, stop loss, I would have felt more comfortable above the swing high. So that's only a 2 to 1 there, 3 to 1 in total for the whole move down, unless I put my stop loss in a bit more of a riskier position, which would have been 5 to 1. But I think I managed to come out of Aussie US dollar. I think it was around 6R in the end. I have to go check my stats, but I think it was around 6R in the end, just by being able to take lower time frame moves instead of, I waited for all the factors to set up on a daily chart and then go to that. It's the same if we go take a look at silver prices, right? Really liked silver shorts. I had my strategy set up here, okay, because we had that sort of break on the stochastic as well. We were also at resistance looking left. Just zoom out a little bit. I think it's a weekly chart. So you can kind of see that area in there, but you can see those highs there, right? Up at the sort of $34 area. We'll grab one of those trend line things up here, right? Back in November of 2012. So that to me was an area of resistance, expected price to roll over. Got the technical setup on the daily chart, and then it's the hourly, right? My first thing that I'm looking for really is a crossover and then consolidation patterns. So yeah, once that kind of broke out to the downside, that was a nice move. Again, head and shoulders pattern, break and retest. Market moved to the downside there. So a couple of similar opportunities that you can look at when it comes to the COP reports. So yeah, looking at COP right now, let's have a little look, because don't actually see too much going on. Like if I just look at the whole screen here, Bitcoin long, which just makes a ton of sense because of what's going on in the market. Canadian dollar's getting there. Canadian dollar is getting there again. If we look at what CAD is doing at the moment, we're coming back into these weekly lows here. And if we look at the positioning from the commercials as well as the hedge funds are selling at very similar levels where we had the turn in price here, which is something again we covered on the channel a while ago. Market also up in this area here, so that's something I'm keeping a close eye on, is the Canadian dollar futures chart. One very interesting chart though is the S&P 500. Now I tend to look at what the hedge funds are doing here. rather than what the commercials are doing in this space. So if we just have a little look, hedge funds buying stock market aggressively at levels we haven't seen really since 2022, which was this downside here. But I asked myself the question, why was this downside created? Now, yes, hedge funds were extremely long. They repositioned, but also we had the situation where inflation was really out of control, and the market was selling off on the idea that the central bank would hike interest rates, because hiking interest rates isn't good for stock markets. And we saw that the market sold off in preparation for that move. We then saw them start to cut interest rates, and I think we also had like some CPI data down in here, which was very aggressive, and that was the turning point for markets. And ever since then, we've been in this upward trend. So I don't really want to go against this upward trend at the moment on the S&P 500. If we just bring in stock market, I don't necessarily want to go against it. In fact, I wanted to be long over the election. I just didn't get it. I wanted a bigger move. Selfishly, I wanted some real big volatility, move into the 5/4s and then a move higher. Reason being is because of the volatility index. Volatility usually, if we go take a look at the VIX, volatility after an election usually falls off quite aggressively. And we were up at the highs around 23s. The election happened, this was the gap down, and usually that's positive for stock markets, because it's, the VIX is usually known as the fear index, and if that falls, then usually risk assets perform better. So the stock market being a risk asset benefited greatly from that. So I got the idea right, I just didn't get any of the execution that I wanted. So unfortunately for me, I wasn't involved in this move. Do I feel like, the stock market could continue higher? Possibly. Do I want to be a buyer at 6K? No. But I think I did some research on how many all-time highs was created on the S&P 500 this year, and I think it was 43. I think there was 43 all-time highs. And when I say that, what I mean is, if you put a line here on the beginning of 2024, and you look at every time the market made a new all-time high, right, which is basically if a day closed above the all-time high, there's 43 in total. So if you had looked at price breaking into an all-time high and wanted to short, I think you would have got burnt in 2024. Obviously, there has been some decent volatile declines in the market, but I need another one of those. I need another move down in order for me to get back involved on the stock market there. One market that's done really well is the Russell, right? Russell broke out of this. Now, the Russell is sort of your smaller companies within the US. The Russell did really well out of the Trump victory, simply because Trump will want to manufacture in the US. He'd want to focus more on US businesses. That's greater for smaller businesses because markets would look less international, trying to deglobalize and things like that. So this is a nice market, in my opinion. Again, do I want to be up at 24s? Not really. Back towards the 23s would be nice. But this is one of the only stock markets that hasn't gone past its all-time high yet, which is here, I believe, looking back in history. Yeah. So about to break all-time highs, I feel. I don't know, the Dow's done it. NASDAQ was pretty close, yeah. So NASDAQ has also done it last week as well, breaking through into all-time highs. And I think that's likely to continue in the near term. It's just, do I want to personally be a buyer up there? No. Chinese stocks still down. I quite like the idea of being a buyer of this, of the Hong Kong or the Hang Seng. But China's lack of stimulus isn't filling me with much joy right now. But there is a support zone coming in here. One market that I was really interested in, nat gas. This had a commitment to trader signal as well as a seasonal signal, and this has been moving nicely to the upside as well. Really nice move. Typically around this time of year we can see a little bit of let me just get it up. Can see some upside before seeing some significant downside in natural gas. So you can see between sort of November 8th and November 25th, we usually see a little bit more upside in the natural gas prices. So that's something I've been very interested in as well, a bit of a move higher. And then that's quite an interesting move, the downside that we see after. And we've got pretty strong correlation across a lot of data. So across 33 years, 20 years and an election year, we've got 2024 prices basically following a similar path to those years. So yeah, looking for maybe a bit of a move towards the end of the month for a bit of decline in natural gas, which would be interesting to see if we were up at sort of, these highs in here. Would we then get a bit of a reversal in price? Any questions so far, guys? I feel like I've been chatting for a while. I like Tuesdays because I get to kind of tell you all my game plan for the week ahead and have a little chat in a little bit more detail about how I see markets. So let me know if that was helpful in any way, shape or form, or if you enjoyed any of the information. I'd like to get your feedback on whether that information is something you're interested in. Also, let me know what you guys are up to. Do you have any charts of interest that you're looking at? Oil is a very interesting market to me also, but I want to see. I don't know whether it has calmed down, but I don't feel like I've seen a lot of escalations between Iran and Israel in the headlines. Please correct me if I'm wrong, if anyone else is seeing that. But I think if Iran retaliates at Israel, that's going to be a problem for oil markets. So I think the risk premium here is quite high. So I'm not really fussed about what's going on in oil markets at the moment, because I just think that's a bit risky. Markets related to China still doing bad. Copper, one of those, continuing to move lower. Typically, if copper moves lower, it shows that the situation in China is not that great as well, and we can still see a continuation here. Bitcoin down 1% today, but Bitcoin has been flying. New all-time highs, reached about 90k. Starting to see a bit of a rebound from those prices. But one area we did talk about a good while ago, we actually had a guest on the show a while ago, Trading Martin, and we were talking about the potential for 50k prices before seeing a bit of a move higher. And you can see the market, as soon as we broke that trend, nice. Do I want to be involved at 90k? No. Can I see this going higher? Yes, but it's hard to be a buyer as a trader mindset. It's hard to be a buyer at those highs. Let's have a quick look at how Tesla's shaping up. Obviously, Tesla prices gapped on Donald Trump becoming president. Markets moved higher, but at the end of the day, Tesla still has to sell cars, right? And still has to, be profitable. And we'll see how that plays out. I do find it interesting that Musk's relationship with Trump, though. I find that very fascinating because Trump wants tariffs. Arguably, Musk does not want tariffs because if he's having parts built in China, it's going to make the Tesla more expensive to buy for the consumer because it'll pass the prices on to the consumer. Or he'll have to eat the cost. Don't think he'll do that. So I'm interested to see if Tesla shares can hold up at higher levels. From a technical point of view, we're coming up into some key resistance points. So just interested in Tesla, to be honest. Never traded the stock personally myself. So I'm not familiar with the movements necessarily of Tesla. I'm more of an FX commodity guy, indice guy. But we know that Tesla will make a part of the S&P 500. You know, another one of those would be Nvidia. Nvidia also did pretty well ever since the kind of lows that formed back in August when we had that sort of mini stock market retracement. And yeah, since then the market has been fairly bullish here as well. I think Nvidia is the largest market cap in the S&P 500 right now. Let's have a look at coin market cap. Let's have a look. I want the S&P 500. I think I can get it. SP 500 coin market cap. Now, coin market cap is a in the crypto site. I like the way they present the information, but I can't seem to find it. What SPY? What SPY? No. Oh well. But yeah, I think Nvidia is the largest by market cap now. I think it overtook Apple. So we'll see how these companies play out over the next kind of few months. John, if you can break down a comment on the UK 100 seems to be going the other way. How does the pound affect the UK index? Yeah, let's have a little look then. So go to the FTSE, right? Lots of different factors at play here for the FTSE. Now, if you want to see how the pound impacts FTSE prices, the easiest thing to do, you can either add the pound futures onto the chart or just type in pound US dollar, right? And you can add that on. This is, I always found, is it in correlation is essentially what you're asking. So if you kind of look at the correlation between the FTSE and pound US dollar prices, you know, is it in correlation? Essentially, yes and no. If you actually look at pound US dollar prices between April of this year and the end of September, they were bullish. What did the FTSE do? Well, the FTSE just went up and sideways. So we haven't really got the correlation between the FTSE and the pound, although FTSE is moving lower and the pound is moving lower at the moment. So there is, I guess, a correlation here right now between the two. But this has some larger things at play. Usually, so for one, let's think about it a little bit. One, UK business, right? What has happened in the UK recently? Well, we've had the budget, right, out of the Labour government. So UK budget. I really should probably type this out instead of trying to write it like that. So we had the UK budget out, right? Now, the Labour government are a little bit more, or what they are doing essentially is raising taxes. Okay, raising taxes, and they're putting a lot of pressure on businesses because one of the things that they're doing is raising national insurance contributions, right? And that's going to impact businesses in the UK in a really big way because employers are basically going to have to pay more in national insurance taxes for their employees. So the problem with that is it creates further expense for UK companies. So what you will probably find is that UK businesses essentially would rethink their plans when it comes to hiring people because there is extra cost involved in it now. And if the growth isn't there, then they're not going to hire people essentially. They may even reduce staff, right, to try and save costs and save expenses. So the UK budget really has stumped UK business growth because they are causing businesses to pay more to do business within the UK. That's why we're seeing essentially this downward move at the moment. Also, if you take a look at what's going on in sort of UK bonds, right? If we have a little look at the bond market, this is the 5-year bonds, right? Now, typically when the 5-year bonds rally, if you go take a look at interest rates, okay, what I'm going to do is just pin that to the right hand side again. Regular. So currently the interest rate in the UK got reduced down to 4.75%. Okay, and if we take a look at the bond market at the moment, or bond yields, they're getting closer to that as well, 4.35%. Now, at one point, the bond yields back in December were thinking that the UK interest rate was going to be around about 3.4%. Now, we talked about sort of that sort of rally in the FTSE, right? Let's actually see if I can overlay FTSE. Okay, give me 2 seconds. See if this works. I want to pin it. New scale to the left, right? So typically, this is a correlation I like to follow. If bond yields are falling, right, it typically leads to interest rates falling, right? Because the market will look at the bond market in order to kind of see where they're positioning things as well. In that state, look what happens to the FTSE, right? Prices rally. What we've had instead is what we've seen in the bond yield market anyway, is we've had a little bit of downside, right? Which would think that the market would move lower, but we didn't really see that impact the FTSE in a way where we saw aggressive moves to the upside. Instead, the FTSE kind of went sideways. And now we're starting to see that the bond yields are starting to rise, which means that the Bank of England might not cut rates as aggressively. And if they're not going to cut rates as aggressively, it's more expensive to do business. Labour government also bringing in national insurance tax, higher national insurance. It's going to cost businesses to do a lot more business within the UK. FTSE moving lower. Does that make sense? That's the way I see it anyway. That's just my opinion on what's going on at the moment. So yeah, hopefully that did make sense. I've been running for an hour and 10 minutes now. I usually do an hour. So I've got some things I need to go and catch up on. So I'm going to leave it there. Thank you to everyone that joined. Actually, we've had more viewers than we had last week, up to around, at one point we were at sort of 20 viewers by the looks of things. So I'm going to leave it there. Thank you to everybody that did join today. If you did enjoy the content and you learned something new, please leave that thumbs up and subscribe. You know, it means the absolute world to me if you do that. It's for free. Hit that thumbs up button. You know, my job here, or what I like to try and do for you guys, is to educate you on how I see markets. And hopefully you can take a little bit of nugget of information from this and maybe implement it into what you're doing, or at least go and research, right? Go and research. So thank you, CG, for hitting the like button. I really appreciate that. Thank you to everybody that's joined me today. I'll be back again same time on Thursday. Come over and see us. If you are interested in Blueberry, obviously you can go to our channels, follow us on social media. You can also head over to blueberrymarkets.com. So thanks, guys. Really appreciate you all. And I will catch you all on Thursday. Cheers.